This week it's been all about the tech companies. Of course, we've had Apple results, we've also heard from Alphabet, and soon we'll hear from Facebook. But what are the charts really telling us? Well, of course, last week we heard from Serge Berger, the founder of TodayTrader.com, and he's back with us now to just see how those trades really are faring after the results. Thanks very much for coming back to us, Serge. Let's start with Apple. In terms of the fundamentals, it's the cash pile that everyone's talking about, but in terms of the chart, what are you looking at?
Yeah, so good to be on, Sarah. I think it's good to follow up on these kind of ideas. You know, the main objective we sort of had last week and the week prior when we talked about what these companies might do from a trading perspective after earnings. We said that, listen, if there's up gaps, you know, sort of gaps rallying to the upside after these earnings report, I think that would provide quite a good opportunity to play these stocks from the short side in somewhat current conservative way. And so, you know, if we look at Apple first, you can see here we're so far seeing a fairly muted reaction to the downside. But my base case, I think, will end up looking pretty good here, which is to say that the upside trajectory in a stock like Apple is probably going to take some sort of a pause. And that's, you know, quite frankly, also going to be true most likely for something like the NASDAQ 100 or the Tech 100, I think, as you like to call it. It's the same story there. In fact, Apple makes up about 14 or something % of that index.
Yeah, I mean, the Apple is interesting. This is an hourly chart we're looking at the moment, but it's really important actually. If you take a look on a longer term basis, this is a daily chart. You know, we're going back over the last couple of years, and that uptrend really still intact there. So what you're saying, we're looking for these little pullbacks to really offer opportunities?
Yeah, well, I think it's all about different time frames, right? So number one, I think from sort of a multi-month, potentially multi-quarter perspective, I think Apple might have a bit of a rain check, if you will, but I don't think it's going to necessarily trend strongly higher. A lot of people right now are looking towards that next phone that they're going to bring out. I guess it's going to be September, October, usually when they come with a new phone. So the next quarter or two might be something where the company isn't going to be scrutinized too much. But I think from a chasing perspective, the stock is going to probably have a fairly difficult time continuing at this rate, right? So from a purely trading perspective, I think any bearish reversals, any sort of up gaps and then fades on a daily closing basis to the downside will probably provide opportunities to trade the stock to the short side, probably towards the 50-day moving average, which is a very simple moving average. Right now it comes in around $141 or so dollars, or I think you have it. You have a couple more zeros on your chart there. And then, you know, from there, you might start to be able to look again from the long side. But again, it's important to keep the different time frames in mind here. Yeah,
so that, as you can see there, they'll just put the moving averages on for you. The black line being that 50-day moving average coming in around the 141 level. It's a daily chart for you at the moment. I also mentioned Google, of course. Alphabet is what we trade here. Again, just like Apple, it's an all-session stock, which means you can trade it out of the normal market hours, meaning you can trade the earnings for it. We're trading around, what, 139.39 at the moment. 939.39 even.
Right, exactly. So, which, by the way, is a great feature to have for something to be trading sort of around the clock, because you take into effect the after hours and the pre-market trading in the primary market in the United States. So that's great. Google, you know, classically, if you were to zoom out on this chart, say, and make it say like a 3-4 year look back, you would see that this thing has just gotten increasingly steep. And if you were to connect sort of the peaks, even going back to let's say something like 2012 or so, and you just kind of connect those peaks to starting with the peak that we just reached the other day, you'd see that we've kind of just reached the very upper end of that multi-year trend. And we didn't just reach it, we gapped up to it after earnings last Friday morning after the stock had reported earnings. I guess it was was a Thursday after the close or something like that. So the fact that the stock actually gapped higher towards that is just kind of what it's giving us is almost like an exhaustion rally. Now, I'm not bearish on the company. It's difficult to be bearish on a growth stock like that. It's a complete behemoth. But from a trading perspective, I think this is an opportunity to play a stock like this from the short side for a trade. Or again, alternatively, if you don't want to be that quick, you wait for it to consolidate and then break in whatever direction it ultimately wants to go to. Those are kind of the two sort of ways that I'm looking at it right now. Personally, in full disclosure, I'm short some out-of-the-money call spreads out to June to kind of give myself a little bit more room for error for a quasi-bearish trade.
Yeah, bring the moving averages into play here. Actually, we're creating quite a gap now between where we're trading and indeed the 2050 and moving further away from that 100. How does that play into your strategy?
Yeah, I mean, that's a great point. I was just going to say, so like, for example, I think people make it generally much too complex using these momentum oscillators, but I like to use a very simple MACD, which stands for moving averages, convergence, divergence. And essentially, if I were to look at a MACD, sort of your regular settings, you'd see that right now the MACD is about at a point where, in terms of its overbought levels, near 20 or so, is roughly at a point where in the past this has coincided with the stock also starting to get exhausted. Now, in this case, you have an even steeper slope and you're reaching the upper end of that multi-year trend. So I think there's even more reason here to be cautious on the long side. So again, it really depends on your risk aversion, level of risk aversion, but I really think at this point chasing it is probably a very weak reward to risk.
Yeah.
And playing.
Sorry, I was going to say you're not one to chase stocks, are you? I know that, which is why very quickly I want to bring in Facebook, because I know it's one that you're saying actually you need to stop chasing this one.
Yeah, and it's the same thing for Facebook, and you remember it well, Sarah. I just don't believe in chasing stocks because there's always a better opportunity somewhere. Because what tends to race higher is usually better. It comes down quicker as well. Facebook's the same exact story, and I like the way you're drawing the lines in a channel here. We have now blasted past the upper end of that range, and it's a multi-year channel. And usually when you see these kind of vertical moves, and in this case, mind you, into earnings, this company is about to report earnings today. We saw the stock rally about 10% over just the past couple of weeks or so. Again, not negative on Facebook from a big picture perspective or fundamentally, but those are the kind of moves that you have to look at and say, you know what, this is probably getting overdone. And quite frankly, the options market is already implying some rockier times ahead, at least for the intermediate term for some of these big tech stocks that we just talked about.
Yeah, again, the MACD really kind of confirming what you're saying, that you're seeing in terms of the main candlesticks at the bottom here. And this is why it's really important to take a number of indicators into play, really to compound that view, isn't it?
It's the confluence of things coming together, which is why I always have to chuckle if someone comes up with a single indicator that's going to solve everyone's problem. A single indicator is good, but it's a matter of looking how things come together, and you create these so-called confluence zones that I always talk to my members about every single day. The confluence, support, and resistance, where stuff comes together from a technical perspective, but also potentially from a news flow perspective, is really kind of where the money is made at the margin.
Okay, I've got to leave it there, but thanks very much. Serge Berg there, founder of the steadytrader.com, looking at the tech stocks as we are mid-earnings season.